How's it going? Today we're going to look at Toast. We're going to look at their financials. The stock's up 10% today. It's a beat earnings. Had a really nice beat in earnings. And for those of you that don't know, let's get it pulled up here. Toast provides payment solutions for restaurants, and they also provide the software solutions behind those payments to prevent fraud and effective fraud prevention for lower chargeback rates. So that's the business they're in. They're in the restaurant industry. They provide those payment solutions through these little devices they sell. So the hardware and then the chip readers down there. And they provide these on the point sales solutions. This like little device here on the left that you can see. It's mostly used in restaurants. You may or may not have seen them. They're pretty popular where I live. This is how I came to know what the company is. But anyways, I digress. The company's up 10% today. Really nice earnings report. And we're going to look at the highlights of that earnings report. So if we take a look, first quarter 2025 financial results, they booked Applebee's, and it's Toast's largest deal in company history. They've added over 6,000 new locations in the first quarter of 2025. Annualized recurring run rate, ARR, as of March 31st grew 31% to $1.7 billion. And just to explain real quick, they defined annualized recurring run rate is the key operational measure of the scale of Toast subscription and payment processing services for both new and existing customers. So it's pretty much just revenue from those payment processing. So that grew at a 31% rate year over year, right? As of March 31st, grew 31%. So really good growth rate for the ARR. ARR as of March, we'll get into the highlights here. First, CEO said we continue to see strong momentum across both our core business as well as our new verticals in international retail and enterprise, including marquee wins in Applebee's and Topgolf. Topgolf's pretty exciting. ARR of March 31st was 1.7 billion. We've already said that. Total locations increased 25% year over year to 140,000 total locations they're servicing. Gross payment volume increased 22% year over year to 42.2 billion. Their services and financial technology solutions gross profit was up 35% year over year to 394 million. So really good growth in this company. GAAP net income was 56 million in quarter one compared to a net loss of 83 million in quarter one of 2024. So really interesting note here is that this company didn't start to turn profitable in net income until June of 2024. And the past 3 quarters, now 4 quarters being reported, this company has increased their overall net income. So looking pretty good there. I like that. But going back to our key points, let's see, subscription services, outlook. For the second quarter ending June 30th, 2025, they're expecting the subscription services and financial technology solutions gross profit, which will be in a range of 435 million to 445 million, which is a 26 to 29% growth compared to the previous year in quarter two of 2024. So really nice growth rate for this company. And they're expecting adjusted EBITDA in a range of 130 million to 140 million. The real big point here, why the stock is trading 7% higher in after hours trading, is they increased their adjusted EBITDA for the full year, increased it to 540 to 560 million, up from 510 million to 530 million. So this company is growing at a really fast rate, and they're now like tapping into that profitability, which is freaking phenomenal. And they've now increased their outlook for the rest of the year. And I think with a lot of investors concerned about tariffs and like slowdowns in the economy, I think it's really reassuring to see that this company is actually increasing their outlook for the rest of the year. If we take a look, so revenue was mostly in line. It says a 0.8% miss. It was mostly in line. And then earnings per share was higher from the previous quarter. Previous quarter earnings per share was 7 cents per share, and they posted 9 cents. So we got an increase in earnings per share. It's continuing to improve in profitability. Operating margin was 3.2%, up from negative 5.2% in the same quarter last year. So as we know, they're now profitable from 1 year ago. And annual recurring revenue was 1.71 billion at quarter end, up 31% year on year. So this company is growing very fast. You can see in the chart, this line is heading northeast, which is what we like. That's our chart for total revenue here. Chart's looking good. It's looking really good for revenue growth, at least. But the other thing too is profitability. This company's profitable now. It's starting to show it can consistently turn a profit. Another chart of ARR northeast, direction we like. So, and then I'm sure Top Golf getting a deal with them, that's probably going to be pretty huge. Last thing I'll mention though, before we close this out, is that Toast is pretty expensive. Before this earnings report, you're looking at forward PE of almost 87. I'm not sure what it will be following this earnings report. It will be interesting to tell. But if you're willing to pay that much for a company that has a very strong growth rate, and also a lot of that growth is coming from recurring revenue from locations they've already established, this company's looking pretty good. It'll be interesting to tell. Let me know if you think that this company is a buy or if you think this is terribly overpriced and not worth the investment. Thanks for watching.